Tell us first about ASML. It is a unique player in this space. So why do you like this name? But also, what does or doesn't it tell us about the rest of the chip space and cycle?
Yes. So first, thanks for having me on the program. Just going back to the prior conversation, we did downgrade this sector September of last year, where back then everybody was bullish and everybody was highlighting backlogs and demand up to the infinity. I think that thesis has played out. These stocks are down 30 to 40%. And now we're looking into a growth driver beyond the 23. The upgrade with ASML has to do with their ability to double their earnings from $16 in 23 through 26. And then earnings would probably grow by 10 to 15% from there on. There are three primary drivers here. First, when you look into 24, 25, the demand drivers are going to be more than just a smartphone. Cloud infrastructure is going to rebound again. And also you have the EV infrastructure that is going to kick in and materialize. We also have the localization of semiconductors. We are building more fabs outside of the China, Taiwan region. These fabs will be up and ready for equipment moving by early 24. That's another driver. And then competitive advantage and competitive pressure among ASML's top three customers, Intel, TSM, and Samsung. They're competing, and they're going to add a lot of capacity as they compete for the same business. Over the next 3 to 4 years, ASML should be able to double their earning, and we actually are arguing that earnings are going to slow down next year. So the call here is increased confidence beyond the current slowdown in semiconductor industry.
So our previous guest, Young Yuma, he also said that he was starting to nibble on early cycle semi plays. What else do you like here?
I think we got to be careful here. The semiconductor industry as a whole is just starting with inventory correction. That inventory correction is going to accelerate into the first half of next year. The slowdown that you were just highlighting a few minutes ago is going to hit the production in the first half. And then looking into the second half beyond, you have to identify companies that are in absolute command and have a bargaining power. And ASML is basically the only player that could meet demand for the trailing edge and the leading edge semi-cap equipment. They basically own and have monopolized the leading edge, and is the only company that could increase prices even in a recessionary environment. This sector, and ASML in particular, started to work on alongside in late 08 before we actually hit the recession of 09. And I think the same playbook could apply here, and ASML could continue to outperform even in a recessionary environment.
Mehdi, I get it. Yeah, ASML is in a very unique position in the whole chip industry, but I wonder, to what degree are you factoring in a potentially steeper global recession? To what degree are you factoring in the possibility that some of these the companies running these fabs space out their capital spend a little bit more in a deeper recessionary environment, and therefore ASML, still their equipment's still in demand, but perhaps getting pushed out a bit longer than we expected a few months ago?
Sure. Very fair point. On a demand side, we're modeling for PCs to be down another 10% on a unit basis, a smartphone down 12%, and the cloud infrastructure actually is spending to be down 5 to 10% next year. But here is the thing that you need to keep in mind. The lead time for ASML's equipment is at least 12 months. So although we're going to go into a recession next year, ASML's customer would have to install equipment at some point next year to be ready for 2024. Now, if you argue that the recession is going to be more than 12 months, then there is some downside risk. But as long as the recession is going to be limited to 4 quarters, I think ASML is going to come out with estimates intact.
Mehdi, thanks for your insights today. Appreciate it. We'll see you soon.
Thank you.